All right, all right. First of all, let's just get a sound check from everybody, please. Can you guys hear me loud and clear first? And can you see the screen as well? Okay, that's totally fine. Today's session will be in English also, not in Arabic. However, if you have any questions in Arabic, I will try to answer your question. But all in all, we will be doing just like what we do as every week. So let's also put up the logo. In addition to that, today's live stream will be a little bit experimental because I'm going to be testing um, the green screen that I just installed in the office or in my office at home. So if there was any kind of glitches or whatever, I apologize in advance. I'm gonna give just another like like 2-3 minutes for everybody just to log in, and then we will actually start and see if we will have any kind of um, any trades for today. So yeah, bear with me just a few minutes and we will start. And by the way, to start with, there is some sort of um, rumors circulating around Twitter right now that the Federal Reserve decision might actually be delayed. I'm not sure how accurate this kind of information is, but so far, CNBC, Bloomberg, I haven't seen anything on it. So we will stick to what we have, at least for the time being, and see where and what we can do. So just give us a little bit, just a few more minutes, and we'll be with you. And for the time being, I'm just gonna put CNBC on the right side, VLC low, just for the time being, and just give me a few more minutes, and I will be right with you.
Year of being closed, I am absolutely thrilled to say that we're going to be welcoming our guests on April 30th back to Disneyland. It's been a long, long time since we've been able to create magic for our guests and put our cast members back to work and help the associated businesses around the Anaheim area. It's going to be a great opportunity, I think, for us to bring that magic back to everybody involved.
It's a wish list on wheels. A choice that requires no explanation. It's where safe and daring seamlessly intersect. It's understated, yet over-delivers. It is truly the Mercedes-Benz of sports sedans. Lease the 2021 C300 sedan
Well,
for just
I
$449
think
a month
we
at your
should.
local Mercedes-Benz dealer.
I think we should be able to start right now. I'm just gonna take off CNBC for the time being. VLC load. Let's take that off. Okay, one last audio video check. Can you guys see my screen clearly and my voice loud and clear? If you have any issues, please just try to refresh your. It shouldn't be low at all. Volume. If you have any issues with the volume, it should be from your side because again, I'm using a broadcasting microphone broadcasting system, so it should be loud and clear for everybody. The volume is at the top. You should be able to do it from your side. Hold on, I'm gonna hear the streaming ones one more time. Let me see. Yeah, I guess it is actually loud and clear for everybody else. So you'll have to try just to try and see your device. All right. Okay. Anyway, so let's go ahead and start. So today is the Federal Reserve decision, as always, and it's going to be probably, I guess, or looks like it's going to be very interesting. There's some rumors circulating on Twitter that the Federal Reserve decision might be delayed for some reason. I don't know what is it, but I don't know also if it's also just rumors on Twitter. And but one of the main things that actually we will have to keep an eye on, and what the Federal Reserve also is keeping an eye on, is basically the U.S. 10-year yields, which is in kind of a troubling levels right now. Or I mean, I wouldn't say troubling levels, but we shall see. But it's 166 right now. The 30 also 30-year yields is over 2.4. That is kind of troubling levels for the Federal Reserve, at least for the time being. So we might see some sort of, or what I believe that might actually happen, that the Federal Reserve needs to push the yields lower. How they might do it, they have two options: either to increase the stimulus or the QE, which is kind of impossible right now. But at the same time, they might actually use a stronger language. I don't think so. They will add more QE, especially that inflation expectation is all the way up to the high. But they might actually use a stronger language. Maybe that would actually work. Today's also U.S. equities is still in the red mostly, but we have only Dow Jones that is still up by 52 points. We have S&P down 17 points, and of course, the most what's the biggest decline remains in Nasdaq, or tech stocks usually. For the past a few weeks, they were still suffering. Um, Again, like, whoever is asking about the audio, that it's actually low, trust me, it is not low. It should be. I mean, from my side is just that's the maximum. And again, this is a broadcasting system. It's not like just any kind of microphone that we're using. So maybe just check your system one more time, and it should be good from your side. Yeah, so let's go ahead and also have a look at what is happening around the markets today. Also, we saw some sort of a major decline in crude oil, which is actually um, not that much down. We're talking about the dollar down in West Texas crude, $63, and also $67 in Brent, which is like just 1.7%, like a dollar and a half almost. At the same time, metals, which I will be keeping an eye on a lot in the next few days after that huge short position that we did in one of the last streaming a few weeks ago at 1810. And we will be looking for long positions maybe, and I hope that the Federal Reserve help us doing so. So going back to some charts today, and as I said before, again, the Federal Reserve has an issue today, which is the bond yields. And I guess over the next few, over the next few hours, it's going to be, I think that the market will be crazy. So to start with, we will have to be very careful with our trading today, because again, it's going to be, I believe that it's going to be something remarkable. We don't know how, we don't know what the Federal Reserve might actually do, but from my point of view, they will have to do something today. Probably, I would say they might actually just use a stronger language to try, maybe, to stop the craziness that is happening in the bond market, over the past few weeks, over the past few days. That's one thing. So let's one moment. Let me just check something. All right. Okay, I'm glad that the audio is loud and clear for everybody. So let's go ahead first of all. And today, as I said, it's going to be a little bit experimental today because I installed a green screen in my office, and I might actually be using it to talk about, or to just talk a little bit about the charts. So for first thing that we were going to do, let's just open up the camera. Maybe you might need to see. That's me. To start with, again, the dollar index actually showed some sort of a bull run, if you might say it, over the past, or since the beginning of the year. And at the same time, I don't believe that this kind of move that we're seeing right now is actually a trend, or it might actually continue for a long time. I believe it is just part of another retracement to the upside before the downside trend actually continues. And this might actually be one of the things that we'll be waiting what the Federal Reserve actually might actually do. Uh, all right. Well, some people got excited about the video, but that's not the experimental one. But yeah, I mean, it looks good. I guess there's no. It looks good. There's nothing in the background. Um, so yeah, if you can look at the chart I'm talking about here, is just the dollar index again. And I believe over the past few days, we tried to break higher and higher, but it's still kind of like the momentum is not that interesting, let's say. So what I'm thinking, what might actually happen today is the Federal Reserve might push the yields lower. How? I actually don't know how. It might be just through stronger language, maybe. And I'm not sure if this would actually work. So for the past, that's the top that we saw over the 8th of March. And at the same time, now we're talking about, sorry, talking about this one here, which is the retracement. So here, if I'm looking at this correctly, I would say this cycle is correct for one reason and one reason only. The 50% actually reacted well for the past, what, 1, 2, 3, 4 days. And I believe this is kind of now started to be a selling zone. And let's go ahead and try that experimental green screen. I'm going to take this off, and let me try and do the other one. So whatever, if any glitch, just maybe. So if you can see that chart above me, I don't know if you can see it correctly, but in any way, or you can hear me well too. That chart again, like it's just, we're talking about just the 15 minutes chart over the past few days. And that level that we're talking about, which is that one here and continues all the way, that's just the 50% the 50% Fibonacci on a very short term. So I'm not sure if will be able actually to break above that level, but now we're having this kind of area that I'm thinking that it would be just a very short term upside risk, or might be actually a very good place to start thinking at least about where we can short the dollar today. It depends, of course, on what we will see from the Federal Reserve today. But that's one of the major charts that I'll be looking at least for the time being. So up here, hopefully, we'll see some sort of. Okay, let's take that off then. We might actually see some sort of selling pressure over the next few minutes. So I'm going to stay just down here, but let me know if that actually worked good for you guys. Okay, so that's number one. Number two, also let's have a look at the euro, and Okay. And we're like 15 minutes away from the Federal Reserve decision. Let's have a look at the euro on the daily chart, which was also um, this is fun. Yeah. I mean, there's a lot of fun things that we can actually do with the green screen. Just wait until you see the when Jerome Powell just start to speak. I'm going to be sitting next to him. Yeah. So we shall see what we do. Um, yeah. But we have all night, so we shall see. Let me just move the mic a little bit toward me. So it would be 1 second. Sorry. Yeah, that's much better for me. Okay. Yeah, we need a Trump. Actually, we do miss Trump these days in the markets, to be honest. I mean, he's actually definitely happy that the market is not doing as good as when he was in power. But anyway, okay. The euro at the same time, we're still doing the same thing. I mean, we tried for the past few days just to test the 200-day moving average, and now we're actually getting closer to what we call the death cross. I mean, not actually like that much, because we need to cross below the 100 and the 200-day moving average, just like what happened in gold. But one thing, since we are talking about currencies, why I'm going to talk about just gold real quickly. And here I'm going again to talk about gold, but extensively. And let me go back to that big camera first and see how I can actually explain this to you. Okay, I guess this is still working. So if you look at the chart here again, like for the past few months, or at least that's, I mean, what you're seeing here is basically the low of the COVID before, or right before the COVID was, or right before the COVID hit, and we had a low there at around like $1,451, and since then gold has been also rising all the way. I mean, so all the way, we went all the way back up and continued all the way until we reached the record high that we saw back in August, which is around 200 or 2000, $2,075. Since then, gold has been going down, and just slowly, and just gradually. But at the same time, there's two things. I don't know what happened here. It's just, I guess, the autofocus a little bit. Yeah, there we go. Which actually, you know what? Let me just stop the autofocus, which is doesn't need. Yeah, that should work. And then since then, we are actually just seeing some sort of just a gradual decline, and I believe that kind of gradual decline that we saw is just another short-term retracement to the downside before before again the upside trend continues. So for the time being, what we're seeing in gold, at least, and especially if you look here, especially after the test that we saw over the past few days, the 61.8% Fibonacci held perfectly, and at the same time we started trending slightly higher, not too much. But I mean, if you look at it again, the chart from the 50, which is wait here, here's the 50 here, which actually led the prices to go all the way up to 1950, and then back down all the way toward what we saw today, or at least for the past few days, which is the 1689. And since then, we're seeing gold binging higher a little bit. So for the time being, I still believe that gold might bottom out for the year, possibly. I'm not sure if that's actually if that's the case, but we should see today. We should see today if the Federal Reserve actually will help us on doing so. Only 12 minutes left. Yes, that's one of. I hope that again, what we will get from the Federal Reserve today to be something really good, because this is what we need right now. Currently, if you look at the major currencies for the time being, it's basically we're looking at everything so far. It's just kind of like we're talking about a tight range today, and I don't know why the US dollar is still in Arabic, but anyway. Sorry. So let's keep that up, and we go back to where is it? might go down. I believe not. I believe that maybe gold already bottomed out, and might actually start seeing more and more upside from here. I hope that this would be the case. Even though that if you look here, it's kind of like just it did, as I said again, it did bounce off the 50 and then the 61.8% Fibonacci. So I would like to see gold now starting to see some sort of uh, some sort of uh, um, stabilization before we see more and more um, more positive signs at least. So that's what I'll be looking in gold. But on the medium term, I believe that gold, or at least the area here that we are in, between 1689 until 1665, I believe that's a very good area to buy on the medium term, not only on the short term. So, what else? Let's go and have a look at the British pound. The British pound is doing something very interesting also today, and even yesterday. It tried to break again below that channel on the daily chart multiple times. But yesterday it tried to do so, but it was successfully bounced off and then closed the day above or within the channel once again. Today we're doing the same thing, but I'm not sure this time if this will be a trap, because I believe the US dollar might not have that much for it to go up from now on. So we shall see whether if we will be able to buy the British pound or no. The euro we said was the same. What else do we have? Oh, Canadian dollar also is still showing some the same. Let's take these off. Dollar CAD is at the lowest level since 2018, and selling such here right now, I wouldn't be doing such things. So I'll be actually looking for a buy, or at least wait for a retracement before we go in any. In, okay. Okay, let me just go to some questions here. Okay, might go down. Might show what's good. What about gold? Again, like I'm still watching gold, whether if we will be able to buy it, and I hope that the Federal Reserve will do something today that will lead us to buy it again. In case of gold, go up faster to level 1766, 1777. We can sell it. Okay, we shall see there. May I ask what the direction of gold later? Again, as I said, we're still watching gold for the time being. I might actually be interested in buying gold on the medium term from these levels. Yes, I would. USD CHF dollar CAD, we're just going to be watching because I got stopped out twice last week, once on a break even and once with 22 points last week. So I'll be just watching for the time being. Here we have, this one is also, oh, look at that dollar Swissy. I mean, heck, oh, CHF. Alan Bashar. So today, dollar Swiss is actually like showing some sort of life, but at the same time, again, uh, we're retesting the previous or the former support area, which was resistance here, and now we're actually testing it as a support. But will the dollar be able to break higher from here? That's kind of a one thing I am not comfortable with yet. Anyway, we have 6 minutes until the Federal Reserve decision, so I'm going to go ahead to ECO, which is where the number is going to be out. Today we had also some bad numbers from the US. The housing starts tumbled by 10.3%. Also, the building permits by 10.8. So basically, permits are down and housing starts, housing starts is down. Previous data were also revised lower or revised slightly higher. But anyway, so far we should see. But I'm not as I said, I'm not leaning toward a stronger dollar today. I'm actually leaning toward weaker dollar after the Fed's decision today, and I hope that the Fed actually delay the decision. That would be something very good to be done, because that would actually will tell the market a lot about what's happening in the Fed right now and how they will deal with higher inflation expectations and also higher bond yield. So for the time being, we will just sit tight. It is just 5 minutes out or 4 minutes out until the Federal Reserve decision. And from now until then, if you have any questions, let me know. So far, of course, as I said, as always, if there will be any trade, we will definitely show it on the screen with this bar here, which is covering me a little bit. But anyway, so that's not the right now. That's just an example of how the trade will be on the chart or on the screen. At the same time, on the top right, you will see it. Also, on the top right of the screen, there's a closed trades and the open trades. Of course, nothing yet for the time being. And of course, I will tell you once I enter any trade, whether buying or selling, by voice, and you will see it on camera. All right, so sit tight for the next just 4 minutes, and I'll be right with you. And as I said, these rumors are on Twitter. Actually, keeps circulating about that the Fed is actually might delay the decision. I'm not sure if that's actually correct. Um, Even though there's like no accurate or uh, yeah, there's no credible sources yet, but some of them, like rumors, FOMC decision will be delayed, press conference postponed, you name it, rumors. I said so. Um, that is still kind of interesting to see. If you have إذا عندك أي سؤال بالعربي بقدر أجاوبك بالعربي، ما في مشاكل. If you guys have any questions in Arabic or English, I can answer it. So uh, usually when the Fed announce the interest rates, the point which is fixed, will that be the case? It depends. It's not just about the interest rate today. It's all about what they're going to do next. And don't forget, we have the something called the economic projections, which is the expectation for or the Federal Reserve expectation for the economy over the next quarter. So we should see. And what might actually happen? I haven't seen like a delay before in my life to say what would actually happen to the dollar, but I guess it would create high volatility in the market if that's actually the case. Okay. 1 minute or not less than that. We have 10 seconds until the Federal Reserve decision, so let's wait and see. The numbers will be out here, and once the numbers are out, I'll just let you know, and we'll see. Okay, so there is no change. Rates near zero. Forecast show 2.2% inflation. That's the economic projections. Leaves on rate. So at least 7 out of 18 of the Fed officials sees at least one rate hike in 2023. So that's actually 2023. There you go. Dollars down once again. Okay, core inflation 2.12, 7 out of 18 official sees at least one hike in 2023. Nothing before that. Okay, staying still. Let's see what we can do. Look at that gold. Okay, so now we will wait for a dip. We'll wait for some dips and then we will see what we can do. But for the time being, this is actually good for stocks. Let me just post some stuff on the screen and I'll be with you. But let's see, first of all, let's go to gold. Again, do not react like real quick to these numbers. Don't overreact, just wait until we see where we can get. Yeah, that's actually very good for gold. That's good for stocks. There you go. I mean, Nasdaq is up. Oh, look, 10-year yields now is also down. So let me just post some stuff real quick, and I'll be right with you. But for the time being, we will be looking into. We will look into any dip to start buying currencies and even stocks. Yeah, just don't overreact much. Wait for a dip first, and then we see what we can do. And the vote was anonymous, so unanimous. That's actually good. Financial condition remains unemployment rate 4.5% until 2021. Yeah, this is kind of ugly for the dollar, actually. This is kind of ugly for the dollar. This is kind of ugly for the dollar. Okay, U.S. equities right now, if you look at it, we're seeing record highs in Dow Jones already 33,000 now. Nasdaq Composite Index is about to turn green. Nasdaq as well. So 10-year yield also still not showing that much of a big decline yet. So that's why I'm saying do not react yet. But just let's wait and see where we can actually yeah, just stay tight. There's no need to react, just like what happened over the past few weeks. So just stay tight, and we will be looking into some opportunities. Bonds are not acting or not reacting that much to it, which is going to be another trouble. So that's why I don't like. Wait, I don't like the move that happened, because look at US GG10. Look at the sorry. US GG10. Look at the reaction for the 10-year yields. It's not that. It is not that much. If you, I mean, let's take 1 day for the day. I don't see it. Yeah, I don't see it doing that much. With that being said, the whole move might be just another short-term one. So that's why do not react yet. Because if 10-year olds stays here, that's not going to help gold that much. Yeah, because the market is almost back to where it was right before the news. I mean, gold back to 1732. Almost everything is back. But all in all, let me just read a little bit through that too. Maintain buys until substantial further progress. Pandemics continue to pose considerable risk to outlook. Inflation 2%, 2022. Yeah, so still not expecting also inflation to go that much up. So I think any dip we should be actually dealing with it. So let's go back to gold, and this one's kind of weak. Yeah, look at that spike. Yeah, do not react. Just we don't need to react. Just give it a little bit. And let's wait. And of course, there's another one. Boost. Oh, okay. Well, the Federal Reserve just boosted the RRP, fair control limits, to 80 billion instead of 30 billion. So that's another way. That is another way. Well, Forest Park. Let's okay. Let's just sit on the chair. See what we will do. Oh yeah, 2 years from now, yes, definitely a long period of time. But I would like just to again wait and do not overreact to the numbers, because 10-year yield is still 166, so that's not a big of a deal yet. Yeah, I mean, waiting for Jerome Powell to talk is not a bad idea too, because again, the move so far, it's not that big of a move yet. So let's just give it some time. And again, we don't need to rush into any trades. That's not the case today. All right, here's my chair. If you And trust me, I mean, it's a gaming chair, but I don't use it for gaming. I use it for trading. But yeah, stocks AMC is also interestingly higher. So let's see. Go for euro one more time. Yeah, I don't use it for gaming. I'm kind of a boring guy. I don't do gaming. I just do flight simulator every now and then for a few hours, and that's it. Uh, yeah, no need to rush into a trade. Okay, so let's see what we're gonna do. So here's the euro. No, why 1 minute? Wait, let's go to our favorite 15-minute. Yeah, let's just take a breath. Let's see what CNBC there. Yeah, nothing. I'm just still watching too, because again, 10-year yield is not reacting that much. Even the 30-year USGG 30 is still not reacting that much so far. What is reacting the most is basically stocks. Everything is just going back up. But I don't like this one. This is not actually good for gold. It's not actually good for stocks too. Uh, so see what Bitcoin is doing. 68, 56. Yeah, still, I mean, bond yields again, it's not showing that much of um, see what's the long hours of trading needs a good trading chair, but we didn't forget that you have multiple screens. Oh yeah, definitely. I mean, the multiple screens are everything. I want this to relax a little bit. It's just not doing that much. Need it to relax a little bit. And, of course, we'll wait for Mr. Jerome Powell to speak. Hey, do you trade every day? Yes, I do trade every day. But live sessions, no, not every day. But I'm hoping like soon we can do it every day. We at the beginning of the pandemic, we did use. I mean, we did live trading sessions every day. That was something. Yeah. Again, like I'm not gonna react to gold right now yet because again, I need to see more relaxing in that 10-year yield that you see on the screen or that thing up there. Yeah. So I'll just watch for the time being, and because I don't need to just react much. Now let's see. Yeah, I just needed to relax just a little bit because it's too much uh, to handle here. Because if this stays here tonight, a gold is not gonna close here. Definitely not. Moving averages are just the 50, 100, and 200-day moving average. I use them only on the daily chart. Let's go back and look at. Yeah, because again, March 2023 Eurodollar futures still reflect full Fed hike. So full Fed rate hike. So that's still something to keep an eye on to use. Oh yeah, as I said. So yeah, that's kind of interesting. And for the record, if we didn't do any trades today, we will definitely do something tomorrow, and I'll definitely be like live trading tomorrow morning. Stuck with DAX. Okay, DAX is good, not bad. So Yeah, I know. Shooting up, but still watching. Nothing yet. Whenever I enter a trade, you will be the first to know. Oh, I'm in gold 1731. Okay, برافو عليك. Yeah, Nasdaq is back up green now. 10 years slightly lower, 64. I mean, it's both. It depends on what you do. But yeah, I do swings and day trading too, stocks and currencies. See, there, I can't. 43. Well, we have 10 minutes until the Fed, or until Mr. Jerome Powell comes in. So we shall see where we do. WBTV, I think was. And again, if we didn't do any trades today, I will definitely be live tomorrow. Oh yeah, Inferno. Yeah, again, like just the 10-year yield is still not reacting that much. It's just 165, and that's not what I would like to see yet. Bitcoin back up 56,792. Cryptos should be doing some stuff today. Good. It is still just right here. Okay, let's just go back to gold because it is. They're still doing the same thing, and it's at yesterday's high. So equities back in green. I mean S&P just a little bit, but Dow is up 150. And most metals today is definitely, look at that. Platinum is the only one that is actually down, but it paired a lot of its declines during the day. Yeah, even OC is good. Okay, with this surge, will there be a dip anytime soon? I missed the opportunity for shorting, but the Euro USD, AUD, I mean, we haven't taken anything yet. As I said, I'm just watching currently because again, like Jerome Powell will be speaking in just a few minutes. Um, so I'm still watching because I don't like how bonds are reacting to such news. Even if they keep pushing higher like that, I'm again, if we didn't do any kind of trade today, but I can just buy something at the high of the day or the low of the day, so I would still wait for a dip. S&P again highs one more time. Okay, we will also listen to the press conference in a little bit. Let's have a look at it on YouTube today. YouTube. Oh my God, I didn't say that. I mean, SoloCAD was 124.90 before the news. Now 124.30. Okay, let's see. Federal Reserve live now. There we go. They're going to be live in just a few seconds. And I'll post it on the screen so for us we'll be able to watch it. Yeah. Right, let me just test and see if the webcast actually works. Federal Reserve. Oh, yeah. There we go. Mr. Powell is coming, so I'm just gonna put it on the screen so we can all listen to it. And
start by noting that it has been a full year since the pandemic arrived with force on our shores. Looking back, it was clear that addressing a fast-moving global pandemic would be plainly and primarily the realm of healthcare providers and experts. And we are grateful to them and to all the essential workers for their service and sacrifice. The danger to the U.S. economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread, but with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates, that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due importantly to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations.
Okay, basically he's just reiterating so far. He's reading the statement once again. The statement once again, and I think we will just have to wait also for until the end of it. Right now, the markets are kind of calm. Nothing much really that has actually really happened so far. So we will just wait. Until he's done, and then we will actually talk about it.
In February, this figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projects here and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions. Howard from Reuters.
Hi, Chair Powell, and thanks for that. So could you talk us through how the...
All right, now this is the questions from the press, which is going to be also important to listen to. But so far, the move is just moving, or the move is just like one way. But at the same time, I'm not actually I still don't like how Bonds is actually reacting to it so far. So we will still wait for at least something to happen, or at least some dip before we do anything. But 10-year yield is still 164. I don't like it that much.
Until we see substantial further progress, and that's actual progress, not forecast progress. So, and that's a difference from our past approach. So, and what we mean by that is pretty straightforward. It is we'll want to see that that the labor markets have moved, labor market conditions have moved, have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment, and when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, When we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people shifted into 2022, it seems.
I don't see that at all. We have a range of perspectives on the committee. I welcome that, and we debate things, we discuss things, and we always come together around a solution. But the strong bulk of the committee is not showing a rate increase during this forecast period. And as data improve, as the outlook improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, the bulk of the committee, the largest part by far of the committee, doesn't show a rate increase during this period. And again, part of that is wanting to see actual data rather than just a forecast at this point. We do expect that we'll begin to make faster progress as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but we'll have to see it first.
Great, thank you. Victoria.
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. There's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question if you'd like to, because that one I'm just going to say that we're something in coming days.
Sure. Okay. Well, then I'll ask about unemployment. There's the unemployment rate is you all have projections for the U6 rate, but you've also been, really emphasizing the fact that that's not the only thing that you all are looking at. You're also looking at labor force participation.
Yeah, this thing keeps going so far. 47. It's just a one-way bet. Now it's like 10-year yields is relaxing a little bit, 163. So our best bet would be, for the time being, is to hope just for a dip. Otherwise, we'll be like nothing. But I guess since we didn't take any trades so far, we will definitely be live tomorrow once again, because again, like as I said, it's hard to catch on such a move right now because, gold is up 1%, 1.8. We have everything is just back up. Euro 0.7%. We haven't seen this like for a while.
Trying to incorporate all of that into the summary of economic projections would not be practical. Obviously the thing that we do include is just the unemployment rate, and that's a very insufficient statistic.
So yeah, better to just keep an eye out for the time being. It is actually hard to take any trades right now here, at least with the current move. I wouldn't buy it like at high. I still need to see some sort of retracement. And 10-year yield is still showing still 163.40. Not a big deal at all.
So we're not actually looking actively at significantly broadening those indicators in the
Thank you. Chris Rugaber, Associated Press.
Like now it's kind of like, but nothing. Kind of showing some sort of relax, but not that big of a deal yet. We need at least the low of the day to be relaxed. Okay. Any one of you took any trades, by the way? So, okay, I don't know what happened here. Chief Powell.
So I guess the first thing to
So
say
let's take that off.
the SEP is not a committee forecast. It's not something we sit around and debate and discuss and approve and say this represents our reaction function as a committee. It's a compilation of projections from different people, and but since we don't debate it or discuss it, it would be hard for me to say why each participant did what they were going to do. So all I would say about this is that um, we've laid out, not just the unemployment rate, inflation that has reached 2% and not just and inflation that's on track to run moderately above 2% for some time. The first two of those three are very much data-based. The third does have a little bit of an element of expectations in it. So we are very much determined to implement this guidance in a robust way. It is the guidance that we chose carefully to implement our new framework. And to meet these standards, we'll need to see data, as I mentioned. So what the
And to
risks
at least see the low of the day.
it says that we're committed to our framework and to the
All
guidance
right. Well,
provided
leads still in gold since 1731. Okay, well, that's good for you. I closed my long trade on gold 1726 to 1745. Great. Well, you guys did more. I mean, much better than I did.
the state of the
Rocket while it
economy in
lasts.
3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how I would think about the SEP.
Jerome Powell will wait to hike until requirements are clearly met. So,
Thank you, Chairman Powell. My question is twofold. One, how high
that's kind of a clear sign,
are
man.
letting inflation rise
So
that
let's hope
change
for just a
ambiguity
slight dip.
in your
Maybe at
view
40 we might buy, but
expectations?
yeah.
And do you think that ambiguity might cause markets to price
Okay,
in
the
a lower
press conference
bound
keeps
for inflation
disconnecting for some
so
reason.
that the Fed
So
really
we'll just
has their
take that
magic,
off.
causing financial
And
conditions to
no need
tighten
for it.
prematurely?
hoping for that dip still. I bought gold on 1744 and moved my stop loss to break even. Will that be okay? I mean, as long as you put a stop loss at break even, that's good. That is still good. Waiting stuff to calm down. Just started trading a month ago. Well, that would be good. Yeah, because I mean, it's a one-way trade now at this time. So I think maybe we'll see some sort of a retracement in Asia or something, and then tomorrow we will be up for a better session. But today it was kind of a little bit risky. That green screen is kind of fun, to be honest. Just tried standing next to Jerome Powell, since we have nothing to do, at least for the time being. Okay. Nothing really. I really can't buy or sell anything right now. Asset purchase is currently appropriate across the curve. So that's still another thing. Anyway, I think we'll definitely do another session tomorrow, and most probably it's going to be at the beginning of the European session, since we didn't take any trades so far. But I don't think so. We'll have that much time to take another trade because today it's right now 10:57 Abu Dhabi time. We have like at least just 1 hour ahead of the closing bell, so I think we will just stay until the end of the trading until the end of the trading session and wrap it up for the day. But I don't think so that we will be able to take a trade. There's just only one last hour. Yeah, it keeps pushing new highs. New highs, gold, and everything. Anyone else took any trades today? I didn't. I just have like some stock swings that I'm still waiting for, and that's it. Oh, not only the 1 hour, everything is closing strong. Would be healthy to focus on long-term investment. Yeah, looks like Nasdaq bottomed out already after that. But yeah, it was a waste of time, to be honest. We wasted this session. $7.50. Yeah, just like everything just keeps going up. Unfortunately, we didn't take any. Yeah. $51. Wow. Yeah, well, here's the power hour now. And finally, 10-year yields just relaxed. USGG back to 162. That will take it. Yeah, now we're 61. Thoughts are in the progress of the policy. Yeah, everything is just reversing and reversing like higher. So, but again, it is actually hard to take a trade right now at these levels. So we will still wait for a dip. So for that, with that being said, I think tomorrow we will go for another live session. That's for sure. Yeah, gold not only for tomorrow, I guess it's going to be for a long, long time too. Because gold might have bottomed out. Yeah. Anyway, we'll stay until the end of the US session, see where the market closed, and it's probably till. Yeah, I don't need to rush. Because now it's huge reverse. I mean, look at the XY. I mean, look at that. 140. Yeah, we're back again. Like, so that's, remember that Fibonacci that we talked about at the beginning of the session? Here's the 15. That did it. Yeah, but yields are, again, like now it's like 62. That's still okay. So let's see if that's going to continue during the Asian session, because Asia Open will be something too. I guess not another speech. He will have. Let me check. I don't see that he has a speech tomorrow. No, I don't see any speech for Paul tomorrow. But tomorrow we have also the Bank of England decision, NBC meeting minutes. So both. Anyway, I mean, we started to see some pullback here, even in the markets, just a little bit, but still. Sorry. Oh, it's still. You're still talking too. Oh, wait, what economic calendar do you use? I mean, I have the Bloomberg one, so. But tomorrow, I don't see any speech for Powell. Tomorrow we have. I mean, during the Asian session, we have GDP from New Zealand. We have the jobs report of Australia. Um, we have government of RBA, Reserve Bank of Australia. We have also ECB. Lagarde will speak. Bank of England decision. ADP non-farm. Canada. Yeah, but I don't see any uh, any member even from the Fed speak tomorrow. And Friday we have Bank of Japan decision. So you can use investing or you can use Forex Factory. Short swing trade on euro. Ah, no, man. Nah. Forget about euro Swiss for real. I mean, I'll look at the chart. Oh, 30 minutes until the close. I mean, it doesn't look bad. The euro is strong now. Why would I actually short it? No, I wouldn't. Yeah, looks like that will be the end of it. Um, but it is what it is. I mean, we tried at least today. But at least we didn't lose money, so that is still something. Anyway, I guess that's it for today, guys. Tomorrow probably will come live through YouTube. I'll put the link during the day tomorrow morning. Hopefully, we'll get a better chance to trade tomorrow. So I'm gonna keep the just the U.S. equities page until the end of the session, and I will see you once again tomorrow. So thank you all for coming today, and I'm sorry we didn't trade today, but this is still it was something nice to be done, I guess. So I'll see you once again tomorrow. Have a good night.